All right. Good morning, everyone. Welcome to Money Talks. Let's do this. I'm your host, Bill Barhydt, founder and CEO at Abra. We've got a lot to talk about as always, so let's get to it. So this week we're going to do things a little differently. We're going to go back to basics and we're going to talk about why Bitcoin, how Bitcoin works. I'm going to give you some tricks about how to explain Bitcoin to your friends. Hopefully, we'll all get back to those dinner parties soon. You're going to want to talk about Bitcoin. How do you explain Bitcoin to people who have no idea what you're talking about? I'm going to give you some tips there. I've got Nathaniel Whitmore, who's a fantastic podcaster in Bitcoin for CoinDesk, is going to join us. We're going to talk about some of the ongoing discussions around central bank digital currencies and all the latest on Bitcoin and crypto. Lots of news this week. I was just checking out I prepare for the show, and then at the last minute, there's always 15 new headlines, right? So it's like it's a moving target here. Maybe you saw OKX went offline for withdrawals. Apparently, the founder was arrested. Lots of police actions related to cryptocurrencies this week, which is unfortunate, but that's the way it goes. Bitcoin fell about 3% overnight on this OKX news. Um, just announced that a bunch of people were arrested for laundering Mexican drug cartel cash using crypto, as well as casinos. We're seeing an exodus of people from Coinbase, which has been all over the news due to some of the comments and policies out of the CEO. We saw an announcement that the Fed chairman is going to be speaking next week about digital currencies. Um, we had a lot of news this week about Ethereum 2.0. Vitalik spoke about that. Feel free to ask some questions there. As a reminder, we've got streaming going on YouTube, Facebook, Twitter/Periscope, Instagram, Twitch, and I'm probably missing a couple, but we've got a huge boom now in viewers all over the world. You're able to ask questions via all of those platforms. We'll tee up the questions and we'll get to as many of them as we can. But I promised I wanted to start off talking about some of the basics of Bitcoin this week. And in addition to that, I'm going to answer your questions. We're going to talk about, we had a contest winner. We'll talk about that as well. And that was really interesting because if you're not following Abra on Twitter, a lot of people shared their stories on what made them believers regarding cryptocurrencies and Bitcoin and decentralization. And I read them all, and I continue to read them all. And please continue to share them. They're really interesting, and I would encourage all of you to follow Abra Global on Twitter and start to read those stories. They're super short, very interesting, and I learned a lot on all of them. So that's cool. And okay, and we'll get to those. So let me talk about the basics for a minute. I promised we would get back to the basics. Let's talk about that. So I want to basically break this up into two parts, right? Part one is getting started with Bitcoin and why Bitcoin matters, and then talk about why we need Bitcoin, and then also I guess three parts, but how you explain Bitcoin. So the first part is why do we need Bitcoin? So I'm going to give you a party trick of explaining Bitcoin, but I think it helps if you put in context why we need Bitcoin in the first place. I believe we need Bitcoin for two big reasons. We need internet money to transact on the internet itself. Before Bitcoin, we didn't have money for the internet. Now, why does that matter? Money for the internet should ideally exist purely in the digital realm while being completely secure. And without money for the internet, transactions are subject to chargebacks by banks. Cross-border settlement is extremely complex and expensive. Private transactions are all but impossible. And of course, governments can print as much paper money as they want, eroding the value of your money to zero. Second, we need to eliminate trusted third parties to securely transact on the internet. Okay? Money for the internet would ideally have no central banker that everyone needs to trust. The bank of Bitcoin should simply be the internet itself and be completely decentralized, just like the internet itself. By eliminating trusted third parties, we can create money that doesn't erode in value over time and initiate transactions that can't be arbitrarily rolled back by some arbitrary overseer. Okay, so now what is Bitcoin? How do you explain Bitcoin at your next dinner party in a way that people are going to get right away? Well, I'm going to give you 6 sentences that you should all memorize. Okay, well, that's my opinion. But you can create a variation on this. This is what I do. I make it really simple. Bitcoin is money for the internet. Bitcoin is a massive network of computers all connected to each other to run a new type of banking system. This banking system has no central authority and no off switch. Bitcoin's banking system really only does two things. First, it mints new coins from nothing into existence. Second, it allows any two parties to share coins with each other. Stop there. That's it. Those are the basics that anyone should be able to understand. Okay, now back to the story. This sounds simple, but it isn't. So let's break it down into more detail. And now you can get into as much detail as you want in your explanation. And so ask me some questions in the chat about this, and we'll follow up and see how all of you are doing with this. And if apologize on the camera here, if you have any suggestions, and we'll get into that detail. Okay, so Bitcoin is a massive network of computers all connected to each other to run a new type of banking system. Again, like the internet itself, this Bitcoin banking system has no central authority and no off switch. The Bitcoin banking system comprises three types of participants. We have wallets, we have nodes, and we have miners. Wallets hold your coins and initiate new transactions that are published to the network. Publishing a transaction is kind of like recording it in your checkbook. Those of you in the US, maybe a little older, remember what a checkbook is. Publishing a transaction is like recording it in the checkbook, but then calling everyone else in the world so that they can record the transaction in their checkbook as well. That way, if you run into a conflict in the future, you don't have to rely on just one checkbook record, but instead you have tens of thousands or even millions of copies of the same checkbook record to validate any prior transactions. Now, nodes are copies of every transaction that has ever been done by everyone since the beginning of time. So think of nodes as people maintaining copies of these global checkbooks that link every transaction that has ever happened to every other transaction. And of course, we call this global linked checkbook a blockchain. Lastly, the third part is miners are the participants who mint new Bitcoin into existence while inserting new transactions into that global checkbook, again called a blockchain. Miners are the ones who call all of the nodes' checkbooks to tell them to add new transactions. They call them so that you don't have to do that yourself. Think about how you could possibly communicate this to all of the other millions of nodes out there. It would be impossible. So miners play that role for you. Miners do this in exchange for a tiny amount of Bitcoin that you pay them for telling everyone to accept your transaction. You often refer to that as a network or mining fee. So as we said above, the value of the coins we already have. So the Bitcoin network solves this by regularly decreasing the rate at which new Bitcoin is created, which puts a maximum supply cap on the total number of coins that can ever be minted. Super cool, okay? So how does Bitcoin's banking system mint new coins into existence in the first place? Well, it's quite clever. Think of all the Bitcoin miners as basically playing a global game of Sudoku, okay? It's like a puzzle game. Each miner is given the same puzzle to solve every 10 minutes, right? The first miner to solve the puzzle wins Bitcoin. In addition to winning the Bitcoin, the miner who solves the puzzle also adds a bunch of the pending transactions that haven't been added to the global checkbook yet, while keeping the extra fee that each person is paying. Okay, so now you have both the ability to mint coins and insert coins into the checkbook every 10 minutes. But if lots of miners are trying to solve the puzzle, the banking system makes the puzzle harder to guarantee that the miners don't solve the puzzle too quickly. because we want to solve the puzzle every 10 minutes. But if fewer miners are playing the game, the puzzles actually get easier. This guarantees again that the puzzles should be solved more or less every 10 minutes forever. Every few years, the amount of Bitcoin you win for solving the puzzle gets cut in half. That means that eventually no new coins will be minted. So lastly, we said that Bitcoin's banking system allows any two parties to share coins with each other. But we also said that there is no central bank. So that presents us with two questions. How does sending my coins from my wallet to your wallet work? What prevents me from sending the same coins to two different wallets at the same time? Bitcoin ingeniously solves both of these problems at the same time. Your wallet doesn't communicate directly with the recipient's wallet. Instead, your wallet tells the miners that it wants to send Bitcoin. The miner that wins the puzzle game also tells the other wallets that your transaction has taken place. Super cool. That means that the global checkbook knows that I sent money to someone else's wallet. It also prevents me from sending the same coins to a different wallet, as the global checkbook would reject me sending the same coin twice, which that addresses the second part of my question about how do we prevent the same money from being sent to two different wallets. So the sum total of all of this is that Bitcoin represents money for the internet that has no central banker. This bank of Bitcoin is the internet itself. Bitcoin is minted over many years, after which no new coins are minted. Bitcoins are sent from wallet to wallet via miners who communicate new transactions every few minutes. So if you know all of this, you know a lot. All right. So I published this as a summary in this week's newsletter. If you go to abra.blog, you can reread the summary. I suggest that you start off by really understanding those first 6 sentences, and then you can dig in to any extent that you like with more detail. Okay, so I did a tweet storm this week about what really gives Bitcoin its value and why I'm super bullish on where Bitcoin is going in price. And I would really invite you to read that. I'm going to come back to that in topic in a few minutes. But we've got a lot of questions. We've got our contest winner. So I'm going to jump around a little bit. I'm going to talk about our contest winner. And let's see. So we have a winner. So as I said, this week the Twitter contest was about all of you sharing your stories on what made you a believer in crypto. Okay. I'm going to go with, pick a couple first, and I'll talk about our winner. Justin B says, I became a believer due to the decentralized nature of crypto. The libertarian in me believes I should be able to own my own money, bank myself, and not rely on any middleman. Justin, I couldn't agree with you more. That's fantastic. Crypto Shripto says some bullet points here: unbreakable security, 12 years of persistence, huge community, convincing ultra updated blockchain technology. Fantastic. Let's see, we've got some more. Kufrador, Kufrador on Twitter says, I believe crypto and blockchain technology have the potential to advance more than just the world of finance. Everything from healthcare, real estate, education, energy, video, gaming are all within reach. These are industries that may be disrupted by crypto. And then we have a winner this week. And this is, our winner is Warley Z. Diaz. Warley Zambales Diaz. And I hope I'm saying your name correctly. I believe in a decentralized future where governments and banks have less control over your money. For me, the right to fully control our money and participate in the global economy are basic human rights. These ideals made me a crypto believer. Fantastic. So, Warley, thank you for that. Love that quote. We will get you your winnings, and I'll get back to some of the other comments in a few minutes. So let's see. We've got a lot going on here. So Bitcoin, we're at about 11,000. I think we were at 11,300 as the show started, and we'll keep you updated on that. Again, we're 11,350. Rebounded a little bit. We fell a little on the news of OKX, but like most news recently, we seem to be brushing it off. So it seems like the market wants to go higher. All good. So we've got some more questions I want to get to here. Oh, okay. So one other thing. Um, we have a bunch of you here from the Philippines, one of our largest user bases in the world. I want to give you some good news. Abra now supports um, Gcash, I believe it's called. If I got that wrong, the team will correct me, but you can use Gcash via our master tellers in the Philippines for cash in and cash out. So if you're familiar with Gcash, as I'm sure all of you are in the Philippines, you can now use that to get money in and out of the Abra wallet. For more information, you can send an email to support@abra.com, support@abra.com. I think we'll be putting up a blog page on details on how that works. So super exciting because millions of you have access to a Gcash wallet. You can now use that to get in and out of Abra, to use our high yield savings accounts, where you can get interest on stablecoins and crypto. We added Litecoin and True USD support. I'm sorry, excuse me, Litecoin and Bitcoin Cash support, as well as Bitcoin and Ethereum to all of the stablecoins that we already support. So check that out, and super cool. All right, so back to some of the other questions we had. Let's see. Um, okay, is Ether a better buy than Bitcoin? Um, Rich, this is from Rich Knight. Rich, I would say they're solving very different problems, right? Bitcoin is really going down the path of being a store of value, being P2P money over time. Ethereum is really meant to be the currency of creating smart contracts, decentralized finance, all types of different financial services over time. So it's really hard to say one is better than the other. It's like saying, is Microsoft a better buy than Apple? They're actually in different businesses, right? I mean, Microsoft has, their gaming business and Apple has their iPhone business, but they're both in tech, right? So it's very hard to it's really hard to say one versus the other. I would evaluate both of them on their own merits, and make your own decision there. I own both. I'm way long Bitcoin. I own a little bit of Ethereum, but yeah. So TechFacts asks, what do I think about the 3% price drop today? I think it's recovered a little bit, but yes, actually, we're only down about 0.6% over the last 24 hours now. But yeah, I think a lot of that is the OKX fiasco. Hopefully, that will wash itself out of the system for Bitcoin over the next few hours, and we'll get back to where we were, which I think is a strong uptrend. Again, nothing goes straight up, nothing goes straight down. I think the trend for Bitcoin long term is super bullish, but again, that's my opinion, not investment advice. So, is Bitcoin the only crypto with a supply cap, or do most cryptos have this feature generally? So, every cryptocurrency has its own what we call inflation policy. This question is from Michael Krokanis, I think it's pronounced, or Krokanos. Michael, again, every crypto has its own inflation policy. On our website, we have published a guide, and this is part of the introduction to cryptos that I wanted to talk about with you. But every crypto has its own inflation policy. And on this guide that we published, you can see here all of our commentary on different cryptocurrencies, how they work, where they fit in, and we have a pretty cool infographic if you scroll down that explains for different cryptocurrencies where they fit in. So you can see that some are basically payments oriented, some are store value oriented, programmable money. So it's not just a question of inflation, it's also what problems are the different cryptocurrencies trying to solve. And if you're really interested in the space, it's really worth digging in to this page. And we also linked to it from this week's newsletter. So if you go to abra.blog or our blog page and go to the newsletter, you'll see a link to this webpage. Right, so you have privacy coins, which are mostly Monero, Zcash, but now others as well, and you have decentralized utilities like Ethereum. You have non-fungible tokens like CryptoKitties and others that are coming out now. Anyway, so it really is worthwhile to take even a few hours of your time. I mean, it's your money, right? So educate yourself, dig in, ask questions, go online, Twitter. Every single one of these coins has a community associated with it online of people who love to answer questions all day long about why their project and why their coin is so interesting. Okay, so thank you for that question, and keep them coming. Got lots of viewers today, pretty cool. So let me talk about buying Bitcoin for a second. So a few things I wanted to show you. Um, so I'm going to bring up the my Abra wallet here. Let's see. It's this one. Okay. All right. So if I want to buy Bitcoin on Abra as a newbie, we give you a few different ways to do that, and I'm going to go through a couple of those with you now. And let's see. So I think I lost the connection here. Let me bring it back. All right. So let me just fix this phone. Perfect. All right. So I've got my Abra wallet here. Now, if I want to buy Bitcoin on Abra, there's a few ways I can do that. The first is I can click on Add Money, and I can do a bank ACH transfer if I'm in the US. A bank ACH transfer will allow me to add a new bank account, and I can choose any of the banks that we support. There's hundreds of them via our partner Plaid, and you simply connect your bank to the Abra app. It will ACH the amount of money that you specify. It's very secure. Abra itself, we have no access to your bank details. The information you enter on the screen here goes directly to your bank via Plaid. We don't touch that information at all. It's encrypted. There's no middleman touching your bank details, just to be very clear. Okay, so it's very secure. Lots of apps, like if you use Venmo or other, Square, they use very similar processes to access your ability to transfer money in and out of your bank. Okay, so very secure way to add money there. The other thing you can do is if you already have crypto, you can add crypto directly. So if you have stable coins, let's say from another exchange, you can deposit your stable coins or your crypto. I just clicked on deposit cryptocurrency. So if I want to, let's say, deposit, I don't know, let's say I'm depositing Tether, right? So I want to basically get a Tether deposit address. I'm going to copy that address. And now if let's say I have a Coinbase wallet or an OKX wallet or one of these others that allows withdrawals, I can just paste that Tether withdrawal address in there and transfer it to my Abra wallet. I can use a credit card, right? And I can basically copy this address, and I can click on buy Bitcoin, and this allows me to buy Bitcoin via my credit card. Now, another interesting thing that I want to show you is I'm going to go to my web page here for Abra. And we also have the ability now to buy Bitcoin with Apple Pay. This is super cool. So I'm going to basically buy, let's say, $50 worth of Bitcoin from my bank account using my debit card. I'm going to click on Buy BTC Now. What I'm going to do is I'm going to paste that Bitcoin address from the Abra app that I just copied. Okay, and I'm going to click Buy Now, and see that I've chosen Apple Pay, and I'm going to click at the bottom on Buy Apple Pay. And when I do that, it brings up my options. I'm going to choose my debit card. I'm going to double click here. It's going to do my Face ID, and voila, in a second here, I will have my Bitcoin purchased, I assume. Yep, all done. Okay, so now on the screen, it says transaction processing, or processing transaction, excuse me. So in a few minutes, I'll get an email that the transaction has completed, and I'll get a pop-up message in my Abra wallet that I got the Bitcoin. That is incredible. I didn't have to type in any details. I literally just used my Apple Pay wallet, which is now linked to Abra, and in a few seconds I had my crypto. So super easy. So love that capability. All right, so back to the portfolio. So there's again, and I can do, if I'm doing large deposits, I can do a bank wire transfer. So this is like, let's say you're in the US and soon internationally you want to deposit a few $100,000, and we have people doing that because I want to earn 10% interest on my money. You can just use a bank wire transfer, and in a couple of days, usually the money will be in your Abra wallet. Okay, so the other thing I want to talk about is how to get started and some of the basics. I promised that we would get back to basics this week, so I'm going to switch phones here. I've got another phone. Let me bring up make this a little bit bigger for you. There we go. So I just installed a new wallet here on another phone. We've got two demo phones here today, so that's good. And I'm in the App Store. I just installed it. I haven't run it yet. So I want to talk about a few things related to getting started, right? The first is, okay, so how does the sign up work, and why does it work the way it does? So let me bring up the app and show you. You often hear this. I'm going to delete the old wallet because it had no money in it and just create a completely new one. So you see the welcome screen here. Now it's going to ask me my name. I'm going to use this is my one of my son's phones. So I'm going to put his name in here. All right. So you have to get, I don't actually remember his phone number. So I'm going to talk, while I'm looking up his phone number, I'm going to talk to you about what this whole, we call KYC process, right? So you've heard this before, this idea of KYC. So KYC stands for Know Your Customer, right? In the global banking system, there is a requirement for banks and all money service businesses to know their customer. What does that mean? Well, it means that you have to basically be able to prove that the person that you're transacting with is who they say they are. And that's simply the law as it relates to banking and money services, and cryptocurrencies basically fall under this money service regulation. So you just saw that I validated this phone by proving that I know the phone number of this phone. I got a text code back. I'm sure all of you have done that process before. The phone recognizes that I'm in the United States and asks me to verify which state. And you have to do this because there are different rules and regulations on a state-by-state basis in the United States. If you're outside the US, generally we don't ask you which country, because we're able to verify that from your phone without asking you. So that's one less question. So it's asking me to choose a PIN. So I'm going to choose that and turn off so you can't see it. So it's nice and secure. So this PIN now allows me to unlock my wallet. And welcome to my new Abra wallet. All right, so I can click on the lower right on Browse Assets. What this does is it brings up the portfolio list of all cryptocurrencies, or I should say the crypto list of all cryptocurrencies that I can add to my portfolio. So if I want to add Tether, I want to add XRP, I want to add Link, Cardano, Bitcoin SV, EOS, Monero, Tron, Tezos, et cetera, et cetera. And it's showing to me them in the order of market cap at the top. So if I click on that market cap, I can sort by price change. I can sort by alphabetical. Market cap is interesting because it gives you a feel for what the biggest projects are. Usually the market cap is a good indicator of which projects have the most interest out in the world, in the marketplace, okay? So I'm going to add a bunch of the top coins. I'm going to click Save, and now I have a whole bunch of coins here in my wallet. And what I'm going to do while I'm talking is I'm going to send from my other Abra wallet, right? I have this wallet here that I was just showing you. So I'm actually going to send crypto from this wallet to the other wallet so you can see how that works. So let's say you have a friend that has Abra and you want to get started really quick. They can send you some money if they're nice. So I'm going to go over here to send to an Abra user, and I'm going to wait while that address book comes up. I have lots of friends, so I actually have hundreds of friends that have Abra. So it takes a while to load the address book for all of you. It'll only take a second because you won't have hundreds of friends. And so what you can do is you can just type in the phone number of the recipient directly, or scroll through the list, or whatever whatever works for you. So here's the person that I was just talking to. I'm going to send them some true USD in this case. I'm going to send them $20 and click next. And then I'm going to click send money, and I'm going to hightail it back to the other demo. Okay. And yeah, so super cool. That was it. That's all I needed to do to send money. Oh, so now it's asking me, I just received money. So let me explain what happened here. I just got a pop-up phrase which says, protect your money. Now, what does this mean? All right. To access the Abra wallet, you are using a private key stored on your phone. Okay. That private key is only accessible by you. So if you lose the phone and you don't have a copy of that private key, you cannot access the funds anymore. That's for your protection. Abra has no access to it. Nobody does. Okay. There is a way, very simple way we give you to back up your private key. It's via this backup phrase, right? So you see it says, show me my phrase now. Now I'm not going to click on that because it's going to show all of you the backup phrase, all right? So I'm going to click on I understand the risk, and then it's going to show me another reminder in a few hours or in a couple of days, okay? And at some point I have to write down that backup phrase and type it back in to show that I've created a backup of it, so that if I lose my phone or if I get a new phone, I can restore my Abra wallet from that backup phrase. And I'll show you how to do that in a moment. So here's the $20 that I just sent to this other phone. Great. So you now see that we have $20 in the wallet. All right. So now I can do all of the same things that I did before to add money to my wallet. I should also mention that in certain countries, you can also use cash to add money to your Abra wallet, such as in the Philippines or in Guatemala and other countries that we're adding. You'll see an option on this screen that's called cash. You click on cash, it tells you where you can go to hand somebody cash and have that show up as crypto in your Abra wallet. And that's all managed via Abra partners. Abra is not actually the party processing that transaction. It's processed by our partners on the ground in those countries. Okay? So I hope this is all making sense. Keep asking questions. We want to make sure that all of this makes perfect sense. And let's see. Trading. Let's talk about trading for a second. Okay, so let's say that you want to, you've just added some USD. You see that I have some true USD in my wallet here. All right, so oh, actually, I just realized let me get back to the true USD in a second. We are running a little bit behind, and we have a guest waiting. So what I want to do is I'm going to jump over here to our Zoom, and let's see if that works. All right, and cool. And we've got a guest joining us today, is Nathaniel Whitmore. Let's see if he's there. Very cool. All right. So while Nathaniel is collecting, oh, there he is. Nathaniel, good morning.
Hey, how's it going?
It's going good. So welcome to Money Talks. We're live. So
Awesome.
you're online with our tens of thousands of viewers all over the world. We've just been talking about some of the basics of crypto, going through some of the weekly news. So you've been writing quite a bit lately about what's going on in I guess the central bank digital currency world, and the idea of governments trying to get into this whole kind of, I guess they call it CBDC phenomenon. Would love to get your take on what you see as the trends, and why now? Why all of a sudden is there this mad rush for this topic?
Sure. For those of you watching, by the way, I had a Zoom background up. I have a closet behind me in the office that exploded, so
Oh
we're
no,
just gonna deal with it. This is real life in the Zoom
all
era.
good, man.
But
I'm
luckily,
traveling
luckily,
myself,
I,
so
I
yeah.
yeah, I don't have the soul to care too much, so it's just a funny thing. So this is a gradually then suddenly thing for sure. I think with CBDCs and well, that's not exactly true. So I think that there have been a few kind of key way markers over the last few years that have accelerated this. This has been a conversation for some time, but when Libra announced in July or June of 2019, that was definitely a starting gun for a lot of different countries. Most specifically, it was a starting gun for China. And you can actually watch between the two Libra hearings, the first one, which had David Marcus, the second one about 4 months later in October with Mark Zuckerberg, the narrative shifted pretty dramatically. The first time they thought they were going to be able to just talk about banking the unbanked and it was going to be cool, and it wasn't. But the thing is, it was really a referendum on Facebook.
Right.
The first hearing had literally nothing to do with the ins and outs of the digital currency itself, really.
Yep.
By October, when Zuckerberg was there, it was all about the fact that China was doing this, and if the Facebook wasn't allowed to do it, we'd fall behind, and all this sort of thing. And I think that they picked up on that as a prime narrative trajectory, because China definitely reacted like they saw Facebook's approach to this space as a serious threat, as something that was going to be something they needed to address. You saw a major acceleration in how they were doing things, and they've been working on this theoretically for about 5 years at that point. But China has kind of kicked itself into the lead in the CBDC space. And I think other governments have started to catch up. Japan, for example, has been very nervously watching what China's been doing, has said to the US government explicitly that they think that there needs to be some counterweight to China's DCEP. And so you have kind of just the natural cycle of acceleration. And I think that what has been notable over the last couple of weeks is that rather than kind of these drips and drabs of individual governments doing things, which we did see a bunch of. We saw South Korea, Japan, Russia have all made CBDC related announcements about upcoming trials or initiatives or things like that. Uh, you also had the sort of influx of reports from the major economic institutions, the historical economic institutions of Western power. So the IMF,
Yep.
the World Economic Forum, the OECD, all of them kind of putting things out. Now, there's virtual IMF meetings going on right now, so I think that explains the timing a little bit. But it's very clear that this is high on the agenda. It's everything from design principles. The Bank for International Settlements put out a paper with 7 other central banks, including the Fed, about kind of what the design principles or core design principles of CBDC should be. So this is all kind of, everyone is clearly lining up. And it's funny, they all try to like fall over themselves to leave themselves an out, right? Where they're
Right.
like, just because we're literally putting a huge amount of time and effort into these reports that we're putting out on major news days, we don't doesn't mean we're not actually going to do this. It just means that we're looking at it,
Right.
and there's Jerome Powell's on a panel on Monday morning about cross-border payments is the technical term, but he's got a couple central bankers with him from, I think, Saudi Arabia and Malaysia, who are explicitly working on CBDCs. So maybe we'll hear a little bit more. Probably not. He's pretty cagey about digital dollar stuff. But it's I don't know. I think it's a thing that's there's a heightened sense of. I guess the other place that you see it is it's starting to tip over from kind of the crypto Twitter sphere into more mainstream parts of FinTwit. You're seeing
Yeah.
them actually take it on. Wall Street Journal's Heard on the Street this week was about how central banks hadn't really articulated or demonstrated the need yet for CBDCs. So I think we're going to see a lot more of it.
Why should the average consumer care, right? I mean, this all started with stablecoins, and the stablecoin craze started with just the ability to buy Bitcoin, and now it's like, what are we going to do with having what is a digital dollar going to do for us, that that we can't do with a paper dollar or money in a bank account or even with Tether, right? So again, why does the average consumer care about this?
Well, so it's interesting. I think one thing that's really important is digital dollars, any central bank digital currency is not the same as a stable coin that's sort of separate, right? It's not
Yeah.
a non-state money. It's the opposite of it. And so to some extent, one reason to care is if you feel or believe there's some inevitability around this, thinking about and having a stake in the conversation about how it's designed is really important, right? This is going to be a competitor or another competitor to cash. Cash is the best remaining source of anonymous money we have in many ways. And so the design principles being deployed against the potential digital dollar are, I think, pretty significant if we assume that it's at some point coming and going to be there. For people in markets, something to care about is what it does to relationships that are have been the same for a very long time, particularly the relationship between commercial banks and depositors versus commercial banks and the central bank, right? If everyone in the country has a Fed account overnight because we're trying to distribute relief really quickly, then what percentage of people are going to say, well, why not just store my money with the Fed? It's the safest place to put it, presumably, compared to
Right.
Bank of America or someone else. And that has major implications for liquidity in the banking sector. So there's all these kind of like reasons if you wanted to get granular. I mean, the easiest one is that most people probably aren't going to care about this right away, and and I think that the way that it's going to impact people's lives is likely to be uh, more on kind of layers of convenience. Like theoretically, it could probably reduce settlement times. Like things should be able to move faster if they do this, and so on and so forth. But it's interesting actually that you asked that question that way, because the ECB this week opened up a period of asking the public exactly about this, like what people care about or should care about as it relates to a potential digital euro. So they got this whole survey that asks all these questions, like, what do you care about in a digital euro? And it's like things like, I care about private transactions, I care about security of transactions. And it's a little funny because on the one hand, like, why not ask? Like if you can get information, good. But at the same time, it's like these questions are so outside of the normal purview of what someone day to day is thinking about and experiencing that it's almost arbitrary. So I kind of feel like, great, have a public consultation period, but
Right.
I don't know how much stock I'd put in that as like kind of the key aspect of how you design the thing.
Yeah, I think it's going to be really fascinating. I think this is a multi-year thing, and part of the point of my question was, why is there such a mad rush to talk about something that is clearly not going to be front and center for the average person for many years? And I think your analysis is spot on. I think Libra was a big catalyst for that. I think Canada has talked about how COVID is it has put this kind of front and center for some of them, and we'll see how it plays out. The other interesting event of this week was this whole Stone Ridge announcement. I
Hmm.
was I was really fascinated by this, and so can you talk about that for a second? Just explain who Stone Ridge
Sure.
is and why this is relevant and what the narrative there is.
Absolutely. So Stone Ridge Asset Management is a 10 billion in assets under management. They have a bunch of different funds. It basically is it's I don't know, smart beta, I guess you could call it in some ways. They
Hmm.
have a bunch of different funds that are alternative asset allocations, but these are not, and I think this is really key in kind of figuring out what this all means. These aren't guys who are out kind of like chasing the long end of the risk tail to generate alpha in markets. This is a kind of a firm that's built its reputation on smart, diligent, consistent application of alternative strategies. That's the way that they've kind of gotten that 10 billion assets under management. And I think obviously the perception of how risk taking they are is relevant when it comes to what we learned, which is they are much deeper involved in the Bitcoin space than we previously knew. So basically, there are a few pieces of news that came out this week. One was that there's a subsidiary that's not fully owned. It's their only non-fully, it's only a partially owned subsidiary, it sounds like, called the New York Digital Investments Group. And this has been around actually for a few years. And the announcement was, it was an official announcement of a recent round of $50 million in growth capital for that. It's a custody shop, it's a buying shop, so it's kind of does a little bit of everything for different types of clients, but it's firmly in this sort of institutional investor space.
Hmm.
And they had previously raised another 50 million, which I think news of that, I remember it like kind of dribbling out somewhere, but we didn't really have a lot of context. It was just some random hedge fund had $50 million in Bitcoin, and
Right.
that was kind of interesting. And what we learned on that front is that actually it's a serious institutional player. They have have over $1 billion under custody. It's growing. They've quadrupled the number of different clients they have this year. And so we got a lot of the backstory. Basically, it turns out that so many people in the kind of upper echelons of Stone Ridge started buying Bitcoin in 2017 and getting really deep in the space, that clients caught wind of it, wanted access to it, and that ended up leading them to actually build this whole kind of institution around it. So that was one part of what we heard. The second part of what we heard, which was kind of more headline grabbing in context, was that the parent organization, Stone Ridge Holdings Group, had 10,000 Bitcoin as its primary treasury reserve asset, was the way that they described it. So worth about 115 million. And so this comes on the heels of obviously Square's announcement of putting 50 million. Sorry, I think I said billion, I meant million. Square's announcement of putting 50 million as a treasury reserve asset, MicroStrategy from both kind of August and September. And so this idea of Bitcoin treasuries has been in the news. But in some ways, this is a story I think that started with thinking it was really about the Bitcoin treasuries story.
Hmm.
And that's part of it. But it's actually more, I think, about the revelation of upsizing or upscaling the number of institutional investors involved in Bitcoin and just
Absolutely.
showing that demand.
Yeah, absolutely. So it's a couple of things, right? One of the things that strikes me about this is when for public companies, and here's for the audience, I'm gonna show you just a chart that shows some of the public companies that have money in crypto. You mentioned Square, Grayscale, um, MicroStrategy was the interesting announcement from a few weeks ago. These companies, they're more or less obligated to tell us when they do something that represents a potentially an outsized risk with shareholder money or money that basically represents treasury in the company, I should say in this case. But private companies really don't have to tell us anything, right? Let's take that chart down. So it begs the question: how many other asset managers not only are looking at this, but potentially have already done it, and we don't even know about it, right? I mean, it could be that there's, I wrote that there's probably more than 4%, which is kind of the publicly quoted number right now in terms of institutional money. Let's call it quasi locked up in crypto, meaning there's no really short term intent to trade or sell. It could easily be that number is much higher, which means that the volume of sell potential in the order books is going to be significantly harder to come by over time, and that could potentially not be factored into any thinking in terms of the value of these underlying assets. I don't know. Are you hearing in your talks with other potential asset managers or others in the streets a narrative along those lines?
Well, I think so. Little bits, like we've even seen some dribble out on Twitter. So Pomp tweeted out something about, I think Sailor Square and the founder of Rome Research, which is a current Silicon Valley darling,
Yep.
very fast growing startup, retweeted it and said Rome did it first. And basically, the story was they had tried to do this in 2017. Balaji, I think, was an investor, so they had some,
Mm,
context for it, and they ultimately at some point before they really started to take off, I guess, had to sell. But it's interesting that you like see these little stories where like there's been years actually potentially of people trying to do things like that or thinking in this way. What I think we have now certainly is this is another outlet for the narrative of sort of the Paul Tudor Jones great monetary inflation thesis that we he articulated in May of this year. And I think that what has happened, in my estimation, is the opening up of a different category of demand where companies are thinking about how to put it on the balance sheet. I just had a friend who was, DMing me about potentially getting his company to try to do this. So I think that you've opened a sort of interesting and good, I think, potentially Pandora's box of this being just a new thing that people consider, and certainly it's going to be a hell of a lot easier in the private space than to do this in the public
of course.
space.
Yep. Absolutely. Okay, 30 seconds. Tell us about your podcast. I love it. Tell people what's it called. Give us the quick and dirty on it, and where can they find it?
So it's called The Breakdown. It's a daily podcast because I'm an insane person. It's sort of split between me just analyzing the most interesting news and then having really good guests. It's about not only Bitcoin, but about the macro environment and trying to set that context for Bitcoin. And more broadly, the way that I think about it, it's just about big shifts in power. I think that big shifts in power are what this industry is about. And that's what I'm really interested in. It's on all the platforms. It's distributed by CoinDesk. They're a partner for me, although it's completely independent, which I don't have a chance to say very often. But yeah, you can find it on any place on Apple, Spotify, etc. And then I'm at NLW on every network if you ever want to connect with me there.
Perfect. So I listen to it every day. I strongly encourage all of our listeners, viewers. We have people listen to this via podcast. We have people watching on YouTube. Uh, Go check it out. I have four big ones in crypto. It's yours, Pomp's, Peter's, and Laura's, and yours is my daily dose of news. I love how you integrate traditional finance discussions in there on occasion. It's a good mix. Nathaniel, thank you so much for joining us, and we'll hope you'll come back and join us again as all this news keeps unfolding in the coming days, weeks, and months.
Thanks for having me, Bill. Thanks for everyone
All right,
watching.
man. Take care. All right, thanks, Nathaniel. So in the last few minutes, I want to get back to some of your questions. I did have a question about 1099s. This is a U.S. specific question. A 1099 is a tax form related to your Abra interest account. We will be sending Abra interest account tax forms 1099s out for this tax year, probably in the first quarter of next year before your taxes come due. I don't have a lot to say about that now, but I do want to just address that. And so we will be integrating those 1099s into the Abra account, or the Abra interest account. So that should make your lives a lot easier. Okay. So we do have a bunch more questions I want to get to, and I was also talking about some of the basics of the Abra app. So I want to talk about trading for a couple of minutes before we get to the last set of questions, and then I want to talk about the interest account. Okay. So let's see. We have our trusty demo here. Perfect. I put $20 in the trading account. So now what I want to do is I want to take that $20. I want to buy a little bit of Bitcoin, a little bit of another crypto, and I want to put some money into my Abra interest account. Okay, so let's do that maybe in, let's see, $6 chunks. I'm going to put $6 into Bitcoin. So I'm going to click on exchange. So now you saw me deposit the money. You saw me buy money via my debit card. At the bottom right, you see a button called exchange. I'm going to click on that exchange button. I'm going to exchange some of my USD. By the way, when you see true USD, that is dollars. That is the default stablecoin that we use when you deposit money into Abra. So if you deposit money via credit card, via your bank account, via bank wire, it shows up in the app as true USD. But of course, you can deposit any supported stablecoin you want. We support Tether, we support TrueUSD, we support USDC, we support PAX, we support DAI. You can deposit all of them. And you can even convert between them. If for some reason you want to convert TrueUSD to Tether, you can actually do that via the Abra app. It's pretty cool, all right? So you can literally convert across all cryptos, not just regular cryptos, but also stablecoins. So in this example, I'm going to convert TrueUSD to Bitcoin. Okay, I'm going to do a small purchase. I'm going to buy $6 worth of Bitcoin, right? Type 600, click done. And I'm going to click on review. That's going to show me how much Bitcoin I'm getting for the exchange and what the price is of the transaction. I click confirm. And now you'll see that the value of my wallet has gone down a tiny amount, a few pennies, and that represents the spread, the exchange rate difference between the dollars and the Bitcoin that Abra charges for that transaction. It's a very small amount. And you'll see that in my Bitcoin wallet, I have $5.89, which represents that spread worth of Bitcoin. Okay. So now what I want to do is I want to add some money to my Abra interest account. How do I do that? So the first thing I have to do is I'm going to click on interest account in the upper right corner. Okay. So um, if I want to um, take any, so it tells me to tap any crypto to get started. So let's say that I want to add $6 to my um, TrueUSD wallet to earn 10% interest on that. I click on the TrueUSD, I click add TrueUSD. Now, I've never used the interest earning account before. That account is managed by Abra in partnership with Prime Trust, a trust bank in the United States. Getting back to that KYC, know your customer detail we talked about earlier, Prime Trust needs to have all of that information about who I am in order to do that. So if I click Start Application, it gives me all of the information that I need to provide to do that. All right. I can take a photo of my driver's license and upload that. And that's basically it. It figures out all of the information that it needs from that. So in the interest of time, I'm actually going to go back to my other wallets where I've already done that. Right. And I'm going to click on interest account again. And you see we have a lot of money in our demo wallet here. And I can click on interest earning TrueUSD. I can click on add TrueUSD. I can type in that $6. Okay, click done. And now I have uploaded or transferred $6 from my trading account to my interest account. And the balance has gone up $6. And I'm now earning interest on that money. I hope that makes sense. And if I want to transfer that money out, you see in the upper right corner, oh, this is the Bitcoin that I purchased earlier. So if you see the three dots in the upper right corner, if I want to transfer money out of the interest account, you can basically transfer money out. It usually settles the same day, so it's very fast. See, it says transfer funds to trading USD. I click on that. So if I type in $6, review, confirm, I've now transferred $6 out of my interest account and back to my trading account. Okay, so I hope that makes sense. All right, so in the last minute or so, I want to talk about a couple of other things. There was a question about what bank or company is providing the interest. The interest is paid by Abra's holding company via Prime Trust. That's why you're providing your ID information to Prime Trust. I hope that makes sense, and we'll have more to say about that in the coming weeks. Let's see. So there was one other question here that I wanted to get to, and that has to do with withdrawals. There was some concern that maybe Abra is not safe because you can't do your withdrawal right away. That's simply untrue. If you come into Abra via depositing cryptocurrency by credit card or debit card or bank wire transfer, you have real-time access to withdraw your money. So if I go back to the demo here, and I press withdraw at the bottom, I can actually withdraw the money via any of these means immediately. And if I'm in some of those countries that support cash, I can also withdraw via cash, which is super cool. And now I can withdraw via Gcash, even in the Philippines. Okay, so we give you real-time access to your money. The only exception is if you deposit via ACH, you'll probably have to keep your money in the wallet for a while, but you can still trade and you can still earn interest while you're keeping the money in the wallet. And that's because the ACH fraud is very, very high in the United States. So I hope that makes sense. Okay, so I hope this was useful. We're trying to get back to basics. We're going to keep going with this next week. We're going to talk a little bit about stablecoins. We'll answer some more questions. We've got some announcements coming up. Lots going on at Abra. Congratulations to our contest winner. Keep the questions coming online. We're very active online. Thanks again to our awesome support staff who's been answering questions in the chat sessions. You guys are awesome. So have a fantastic weekend. Thank you for joining us on Money Talks, and we will see you soon.